Hello, good evening. It's Adil Fasal here, market analyst at CFDs.com, the leading spread betting and CFD brokerage. Be sure to actually visit www.cfds.com to certainly learn more about the products and services that are on offer, and also with regards to the educational side of things, certainly visit cfds.education to learn more too. Okay, so this is a wrap up of the US markets, and we'll certainly find out what direction they're heading, given the fact that we have Chinese GDP overnight. Expected is around 6.8%. We also have retail sales data as well. Overnight production data out of China. So it certainly will dictate sentiment and movement with regards to the markets themselves. Now, looking at the actual Asian market setup thus far, the Shanghai certainly is into potential turbulence, as we can see here. You have the 50 MA. Any thrust higher will go, obviously equal previous support equals resistance. Given the fact that we have this fib retracement, so pivot high to the pivot low, we are currently around the 50% fib pivot. Any push higher will be into the 61%. So it'll be certainly interesting as to how the Asian markets react. Now, we do have the emerging markets index. Now, if I just bring up a chart, the emerging markets, bear with me. The EEMA. Emerging market index fund, here we go. No, that's not the one, it's the other one. Okay, right, here we go. We also have the EEM. Bear with me. So we have the EEM and we have the EEMA. I need to get rid of the other one. There we go. Okie dokie. Bear with me. Okay, so emerging market fund, here we go. So let's delete the pivot points here so you can see a better view. Okay, so as you can see here, previous support equals resistance on the emerging markets. So it's all about China and the emerging markets. Now, there was an article out over the weekend with regards to how dependent the Fed has become on the Asian markets. Okay, so China and emerging markets are certainly key as to drivers of central bank policy. Obviously, we all know a dovish Fed obviously triggers stock markets to go higher and the dollar obviously to go lower. So that QE trade is certainly back, and it certainly seems to be in full steam. Okay, so it's important for us to observe what's happening there. Now, with regards to the Nikkei, we've had some various news over the weekend with regards to Mr. Aso stating that there will be no additional stimulus from the BOJ. So obviously that's going to cause the yen to pivot higher, which in turn will help the dollar move higher as well. So if I just bring up a chart of the yen, I think with regards to US markets will be very important. So DJFX yen. Let's bring this up. DJFX yen. Here we go, yen. Okay, so just save that as well for future reference. I'm able to discuss this in the videos. Okay, so as you can see in the daily chart here, previous resistance equals support. Okay, and therefore from a technical perspective, that's obviously holding. Now let me just get rid of these pivot points again. Apologies for that. We do have a lot of mess on this chart, so I want to give you the best possible view here. Just save the settings. We're done. Okay, so as you can see here, we have a bullish engulfing candle, so we're obviously bouncing off there. Okay, so given the fact that we're going to get no additional stimulus, that's obviously a bearish slant in the markets because it's hawkish in terms of the yen. Yen rises, as we all know, equals risk off, along with the dollar and CHF. And that obviously causes the equity markets to follow as well, given the fact that it's the anti-QE trade. Okay, so we have a bullish, or should we say a bull flag. So we've consolidated 3 days now, and we are looking for a thrust higher overnight. It's going to be interesting to see what the Chinese numbers come out. From my perspective, it seems like the numbers will be weak. From my interpretation of events and all the economic data thus far, thereby sending money rotating towards safety, which obviously is safe haven assets, so safe haven currencies such as the CHF, the yen, and the dollar. The dollar itself is already set up for a thrust higher, and so is the yen. Okay, if I bring up the chart of the dollar, which I've already saved here, you can see here we have this diagonal trend line. We've held horizontal support, we've held diagonal trend line, and you are looking for a potential thrust higher. Now, the economic data on Friday, this is quite important, this, by the way. The economic data on Friday out of the US was considered to be, in terms of supporting the dovish theory, certainly was not there. Okay, the inflation numbers came out slightly better than expected, and so did the jobless data as well. So add those two factors or variables in together, and given the fact that the market has obviously sold off quite substantially based on the expectations of a potential dovish report, you are going to see the reverse. So dollar starting to rise, yen starting to rise, CHF starting to rise, and that's obviously going to create a risk-off scenario, and that will hurt commodities as well. Given the fact that you've got copper and oil certainly under pressure, so if you bring up a chart of copper, you can see here we have triple top. So given the fact that the dollar is obviously into support, that isn't a good sign at all. Okay, now if we add in the fact that you have a potential for a H&S formation here, so you have the double top as the head, which has been confirmed, you're looking for a right shoulder, and copper now starting to move south. Okay, and that will obviously move south based on weak Chinese data. So intermarket analysis is certainly giving you a clue as to which way copper chart will go, which in turn, obviously, we all know copper is dependent on economic growth or global growth. Excuse me. As you can see, it's my bedtime. I'm up at 5:30, 6 in the morning. Just basically, that's my routine. Given the obviously you're a day trader, you have to be up in the morning early. So I'm yawning at present. It's currently 10:30 making this video, so I should be asleep. Okay, so Chinese data will keep me awake, though, one eye will remain open on Chinese data. So okay, so right shoulder going in here. And we are looking for a potential thrust lower on copper. So having said that, quickly look at the chart of crude oil itself. As you can see, 4-hour chart again. One of the major concerns with regards to crude oil is that the rally from the $44 level up to the 51, and then obviously all the way back down to 45. That's not a good sign. That's not very healthy at all. And again, that would add to the argument that you're looking for a potential reversal H&S formation. Given the fact that the oil price has been held higher, has been held higher due to geopolitics and not due to economic growth, and therefore it's always vulnerable to a reversal if it's not held higher by obviously fundamentals or strong fundamentals. Okay, so that's very important with regards to observing there. Okay, now that I've discussed the fundamentals, because it's all about China, and obviously given the market's over exuberance on the dovish side, okay, given the fact that they've certainly held to the belief that interest rates will not rise this year, nor will they rise next year, or potentially push towards mid-year 2016, I think that's unfounded to a large extent. The trade has reached its zenith in terms of obviously trading on the back of central bank has your back, i.e. no interest rate rises this year, next year, etc., due to emerging market chaos, so on and so forth. Okay, so I think that easy trade is over now. And when reality kicks in and we realize that we are lacking growth and we have deflationary concerns, etc., then the selling will certainly be triggered off again. Okay, and that can be seen by cross-referencing the chart on the actual Russell and the DAX and the FTSE, etc. And I'll certainly explore the other options as well that are available in terms of technicals. Okay, so that's the situation or scenario that we face at present. So let's try and look into this market now, especially given the fact that we had Netflix. Obviously, profit warning from Netflix last week. We had Walmart concerns as well. We had retail concerns, etc. So there seems to be a lot of headwinds. Okay, global headwinds, macro headwinds, in terms of obviously preventing the market from thrusting higher. And like I said, the QE trade certainly has been exhausted now. So let's break down this market from a technical perspective. Okay, so Dow Transports, and first of all, okay, as always, Dow Transports are very important. As you can see, weekly chart certainly into resistance. Confirm that key diagonal trend line. Daily chart, you can see here, inside bar, we sold off and flushed off on a Friday, certainly indicating weakness from my perspective. Okay, given the fact that everything else was potentially rising, so certainly some concerns there. Okay, the Dow itself, given the fact that we had Walmart obviously selling off quite substantially, the Dow itself has been quite impressive. We have pushed and broke above the previous support equals resistance zone. Okay, we are back into that zone now in terms of resistance itself. We have the next level is 17,290, currently 17,220. Okay, so previous support equals resistance at 17,290, and we have 17,240 as well. Given the fact, like I said, we're at 17,215, we're very, very close to that resistance zone. Okay, so bear that in mind in the daily chart on the Dow, and given the fact that the Dow transports are weak, we certainly have a concern there as well. Okay, now the iShares Russell, this is the Russell 2000, which I'm looking at IWM. As you can see, we're holding that 75% resistance. We have this diagonal trend line resistance, and you obviously put in a hanging man candle as well. So all these factors put together certainly indicate weakness for the Russell. Okay, and you can cross-reference that with the IWN. So if I bring up the IWN, where art thou, IWN, where art thou, where art thou? Here we go, IWN. And if you bring up the IWN, looking at in a weekly chart, you got previous resistance equals support. Daily chart, you got gap level resistance and unable to move higher. So definitely weakness there. Okay. Now, if I look at the S&P 500, we have a different story here. On the weekly chart, we're into fib 75% resistance. Previous support equals resistance at 2045, so that's going to be key. We're already at 2033. The daily chart on the S&P, as you can see, we broke out of that previous level. We did break out quite healthily from a technical perspective, because if you look at a 60-minute chart, we went and retested that 2020 level and off you went to the races. Okay, quite substantially. 10-minute chart, you can certainly see that as well. Initially we held that level twice at 2030. You went back down. We held the previous resistance equals support, and abracadabra, off we went to the races. So the daily chart, again, is going to be key. If we can stay above the 2020 level, then the bulls are certainly in command here. 2040, 2050, 2060, etc. can certainly be achieved. But again, like I said, given the fact that the Russell's not confirming, the Dow transports aren't confirming, I am very concerned. Okay, especially the DAX isn't confirming. And realistically, are we really buying the stock market on the basis of the Fed delaying rate hikes by 6 months? Okay, so, and given the fact that we really are lacking in terms of growth, and deflationary concerns certainly remain the dominant theme, and so on and so forth. Okay, so it's not a healthy sign, especially when Walmart has a profit warning and Netflix has a profit warning. So certainly looks circumspect to me. Okay, certainly is circumspect overall. That's my understanding anyway. I'm not sure what I've done there. Okay, 1 second. Just adding in volume here. Sorry, let me just add this volume in. Okay, just looking at the volume itself. So slightly lower volume than the day before. So again, looking for keys in terms of volume, slightly lower volume from the day before, but healthy volume nonetheless. One can't argue that the volume has dropped quite substantially. The volume is more or less on par. So again, more observation needed. Maybe I am being too bearish at present, and but having said that, I have my arguments. Okay, so like I said, the Russell not confirming, the Dow transport's not confirming, Asian markets not confirming to a large extent, except China. To be honest with you, except China, given the fact that the weekly inflation number certainly has reignited hopes of more stimulus, etc., or Chinese rate cuts, etc. So from the Chinese central bank. So again, that needs to be observed very carefully. Okay, and again, always be open-minded. If I get stopped out, I'm more than happy to switch my bias. Okay, that's my understanding. Given the fact that we've had anti-QE talk thus far over the weekend from BOJ and the ECB, it's my bias again will be firmly on the bearish side at this current juncture. Okay, I think that's a wrap in terms of US markets. The only index I've not already covered is the Nasdaq. The Nasdaq itself, like I said, with regards to Netflix, etc., would remain under pressure. You do have an unfilled gap at 4,500, but again, it looks very unlikely to be filled due to the fact that we have concerns with regards to semiconductors, obviously hitting the 200 MA, and the biotechs as well remaining weak. Okay, folks, I think that's a wrap. Be sure to visit cfds.com for your trading needs, and I wish you the best with regards to Monday's trading and the week ahead. Goodbye now.